My greatest mistakes were, it's funny in a stock, all you can lose is 100%. I've done that. And your great mistakes is selling a good company, and then it doubles, then it triples and quadruples, because you make a lot of mistakes, and so those ones that go up tenfold, I call them the 10 baggers. So some of my mistakes are saying, oh my God, this stock is too high, and I was wrong. And you had to figure out, what inning am I in this baseball game?
Because a lot of times people buy on the basis, the stock has gone down this much, how much further can it go down? I remember when Polaroid went from 130 to 100, people said, here's this great company, great record. If it ever gets below 100, just buy every share, and it did get below 100. A lot of people bought on that basis saying, look, it's gone from 135 to 100.
Hello everyone, welcome back. Today we are going to listen to Peter Lynch explain why he hates buying the dip. Because of the unpredictability of the stock market, trying to time the market is one of the most common mistakes investors make. Comment below if you dollar cost average or wait for dips in the market. Now let's hear Peter Lynch's explanation as to why he hates buying the dip.
Excuse me. There's a lot of times people buy on the basis, the stock has gone down this much, how much further can it go down? I remember when Polaroid went from 130 to 100, people said, here's this great company, great record. If it ever gets below 100, just buy every share, and it did get below 100. A lot of people bought on that basis saying, look, it's gone from 135 to 100. It's now 95, what a buy. Within a year, it was 18. And this is a company with no debt. I mean, this is a company, it was just so overpriced, it went down. I did the same thing in my, I think my first or second year at Fidelity. Kaiser Industries had gone from $26 a share to 16. I said, how much lower can it go? It's 16. So I think we bought one of the biggest blocks ever on the American Stock Exchange of Kaiser Industries at 14. I said, it's gone from 26 to 16. How much lower can it go? Well, at 10, I called my mother and said, Mom, you got to look at this Kaiser Industries. I mean, how much lower can it go? It's gone from 26 to 10. Well, it went to 6, it went to 5, it went to 4, it went to 3. And now fortunately, this happened rapidly, or I would probably be still caddying or working at the Stop and Shop, but it happened fast. So I was able to, it was compressed. And at 3, I figured out, there's something very wrong here, because Kaiser Industries owns 40% of Kaiser Steel, they own 40% of Kaiser Aluminum, they own 32% of Kaiser Cement, they own Kaiser Broadcasting, they own Kaiser Sand and Gravel, Kaiser Engineers, they own Jeep, they own business after business, and they had no debt. Now I learned this very early, this might be a breakthrough for some people. It's very hard to go bankrupt if you don't have any debt. It's tricky, some people can approach that, it's a real achievement, but they had no debt, and the whole company at 3 was selling at about $75 million. At that point, it was equal to buying one Boeing 747. I said, there's something wrong with this company selling for $75 million. I was a little premature at 16, but I said, everything's fine, and eventually this will work out. And what they did is they gave away all their shares to their shareholders. They passed out shares in Kaiser Cement, they passed out shares in Kaiser Aluminum, they passed out their public shares in Kaiser Steel, they sold all the other businesses, and you get about $50 a share. But if you didn't understand the company, if you're just buying on the fact the stock had gone from 26 to 16, and then it went to 10, what would you do when it went to 9? What would you do when it went to 8? What would you do when it went to 7? This is the problem that people have, is they sell stocks because they didn't know why they bought it, then it went down, and they don't know what to do now. Do you flip a coin? Do you walk around the block? What do you do? Psychiatrists haven't worked so far. I've never seen them running in. The psychological psychiatry fund I've never seen listed for with the SEC to make it through as a mutual fund. So they haven't seemed to help. I've tried prayer. That hasn't worked. So if you don't understand the company, you have this problem when they go down. Eventually, they always come back. This one doesn't work either. People think RCA just about got back to its 1929 high when General Electric took it over. A lot of double knits never came back. Remember those beauties? Floppy disks, Western Union. The list goes on and on. People saying it'll come back. Well, it doesn't have to come back. Here's another one you hear all the time. It's $3. How much can I lose? I've had people call me up saying, I'm thinking of buying this stock at 3. How much can I lose? Well, again, you may need a piece of paper for this, but if you put if you put $20,000 in a stock at 50, or your neighbor put $20,000 that fool at 50 into the stock, and you put $20,000 in at 3, and it goes to 0, you lose exactly the same amount of money, everything. And people say it's 3. How much can I lose? Well, if you put $1 million on it, you can lose $1 million. Just the fact that stock. This may be a reason to research a stock. The fact that stock is 3 down from 100 doesn't mean you should buy it. And in fact, short sellers, people that really make money in stocks, they don't short Walmart, they don't short Home Depot, they don't short the great companies, Johnson & Johnson. They short stocks down from 80 to 7. They'd like to short it at 16 or 22, but they figured out at 7 that this company is going to go to 0. They just haven't blown taps on this thing yet. It's going to 0. And they're selling it short at 7, they're selling it short at 6, at 5, at 4, at 3, at 2, at 1 1/4. And you know to sell something short, you need a buyer. Somebody has to buy the damn thing. And you wonder, who's buying this thing? It's these people saying it's 3. How much lower can it go? You know,
When you were actively managing money, you presumably were under the same pressures as other fund managers to show performance results.
Right.
Did that incline you to sell too quickly sometimes?
Well, I think my greatest mistakes were, I mean, you know, it's funny in a stock, all you can lose is 100%. I've done that. But your great mistakes is selling a good company, and then it doubles, then it triples, and it quadruples, because you make a lot of mistakes, and so those ones that go up tenfold, I call them the 10 baggers. So some of my mistakes are just saying, oh my God, this stock is too high, and I was wrong. And you had to figure out, what inning am I in this baseball game? I sold Toys R Us way too early. It went up 20-fold after I sold. I did the same thing at Home Depot. Those are probably my 2 greatest mistakes I ever made.
When should you sell?
Well, you ought to find out why you bought a stock. If you're saying if it's a cyclical company and they're doing poorly, and they're doing awful, you wait till things are getting better, and they're doing terrific, and then you sell it. But with a growth company, you have to say, Walmart's case, 10 years after they went public, you could have bought the stock and made 500 times your money. You say, still are only in 15% of the United States. And they could say, why can't they go to 17? Why can't they go to 19? Why can't they go to 23? So for the next 4 decades, they went around the country. So you have to say to yourself, in this stock, I have a 10-year story, a 20-year story. You ought to be able to write that down and follow that. And that's what I do with the company. And that's your decision. That's how you sell it.
We have a novel element for many investors today in the trust issue.
Yes.
We also have security problems that we didn't traditionally have in America. Have they changed the way you pick and believe in stocks?
No, you still buy a company, and you buy a company to grow. And if it's a textile company or it's an electronics company or software company, you better understand what they do. And if they do well, the stock will do well, no matter what happens to the market. If the Dow Jones today was 1,000 or 500, you would have made a lot of money in McDonald's. You would have made a lot of money in Johnson & Johnson. You would have made a lot of money in Gillette. These companies' earnings have gone up a lot the last 30 years. And if the market was 50,000, you would have lost money in Burlington Industries. I recommended that in 1969. I think it's gone from 34 to 2 with no stock splits, because their earnings have been terrible.
Well, your modesty actually makes an important point, which is people with the best batting averages in the world don't bat 1,000. I sometimes get angry mail, particularly during bear markets, saying so-and-so recommended such and such and it went down. Well, how often did you come up with a clinker?
Well, this is a funny business. You don't have to be right even 5 times out of 10. If the times you're right, you make a double and triple, it offsets all those times you lose 20 or 30%. So when you buy a stock, you ought to say to yourself, how much can I lose and how much can I make? And you ought to be able to make a lot. Because stocks are risky. I mean, look at how much we lost in AT&T. Look how much we lost in Xerox. These were quality companies. You know, you could lose a lot in a stock. So you got to say to yourself, how much can I make? Because I want to buy a stock, if I'm right, I'm going to make a double or triple.
Does your own confidence ever get shaken?
Every day I think the market's going to go up. You know? I keep calling a lot in my company, so I keep calling the company.